Nice to see you. Go ahead, Fa Choi. It's been that long since the last time you've been here, Marcus. So it's interesting. You're saying don't be a hero. Don't go out there and buy the growth stocks, but look for those boring coupon clipping dividend players.
Yeah, I mean, the surprising thing is that's what's worked over the last 5 years. It's worked over 10 years. It's worked over 15 years. It's worked over 10 years. But as you say, the perception is boring and growth is sexy, and everyone wants to go where the growth is. So people buy growth, they overpay, and it underdelivers. So clip coupons, you'll retire earlier, and there's nothing wrong with that.
And now, on average, these dividend plays have outperformed growth stocks by 3% per annum. Is that right?
Yeah, it's about 320 basis points per annum over a 20-year period. And again, the reason why dividend works is that your interests and the interests of the family are actually aligned. The family wants to have money because you have to distribute it to obviously the internal shareholders, and you are a shareholder as well, so you like the money. Secondly, they obviously understand that capital management is important, so de facto they don't build up a lot of cash. And thirdly, we focus on companies that are profitable. If you don't make money, you don't pay dividends. So from an investment point of view, it sounds really boring, and everyone believes it is boring, but actually it works. So if it's boring and works, why not do it?
Yeah, and are you advocating the strategy now more than ever, considering there is a lot of caution on the markets, a lot of volatility? People don't exactly know which direction to go at this point.
Well, it's interesting. I mean, you normally have markets in Asia sort of run in 3 stages. The early stage is what we had last year, the recovery, and you tend to make 50 to 60% returns in the recovery phase. In phase 2, it's the grind higher. So if we're right, markets continue to grind higher from here. Clearly, if you can get a 5 or 6% dividend yield up front, that's not a bad thing to have.
I'm looking at some numbers here provided, and it looks like over the last 10 years, stocks have returned 5.9% per annum in U.S. dollar terms, and in terms of dividends, contributing about 45% of total returns in Asia, ex-Japan.
Correct.
That's astronomical, 45%?
Yep. 45% of your total return has come from dividends, which is actually very similar to the number in the U.S. over the last 100 years. And so, again, it's a huge contributor to total return, and people who leave it on the side are leaving, 45% of their return on the side, which is a dumb thing to do.
No. Is it a dumb thing to do? Yeah, it sounds like a dumb thing to do. You probably want to keep all the pennies you can. What about areas, these dividend plays around Asia-Pac? Can you isolate certain markets that probably, on average, have better yields?
I mean, it's interesting. I mean, if you look at it sectorally, the sectors that still have very high dividends is the financials across Asia, which we actually happen to like. Tech, by and large, the Taiwanese tech names do have very high dividend yields, again, which we do seem to like. And if you're looking at on the defensive side, a lot of the telcos, again, have very high and sustainable dividend yields. And they've underperformed, and again, they don't have the kind of growth. But if you look at the returns that you've had over 5, 10, 15 years, it works.
Okay. Well, let's get into some of those names, because one of the names that piqued my interest was the one in Pakistan, which, when people think of Pakistan, they think, oh my goodness, there's a lot of stress in this market, obviously very volatile and unpredictable. So why would Pakistan be a right place to look for a dividend yield if you want to be boring and play it safe?
Well, if you want to be boring, I mean, the list that we provided is, the stocks that we cover that have high yields, and amongst the Pakistanis, there are some high yields. But if you want to go away to sort of less riskier areas, you've got lots of telcos, be it in Taiwan, be it even in Singapore, that pay very handsome dividend yields. You've got tech names in Taiwan, that pay very high dividend yields and are, again, very high quality companies. So, there is a Pakistani name in there as well. But by and large, you tend to find that those high yields, actually do reward you for the risk you take.
Can we get into some names here? I just want to get into some names quickly, and maybe you can point out the best play in the telecom space, because we all know that telecoms obviously are very safe dividend yielders, and that's why they've done well, especially in defensive times, which it seems like we are in now. And some of the names that you mentioned include StarHub in Singapore, here in Hong Kong, PCCW, and then we have Globe and Taiwan Mobile as well. And these are all very attractive yields, and 9% plus for PCCW, StarHub, 7% plus for Taiwan Mobile and Globe.
Correct. So the numbers that you mentioned earlier in terms of the returns that you've made in the market over the course of the last 10 years, some of those stocks on our telco side have yields that are already higher than the return you've made in the last 10 years, and very close to returns you've made over the last 20 years. So from that perspective, I would certainly look at some of those.
Yeah, and Pakistan would only be recommended for, I guess, very aggressive clients.
People who
among the dividend yielders, which is really interesting.
I mean, you have double-digit dividend yields, obviously, for a reason that you've got a lot of risk. But you can get, again, 5-6% dividend yield amongst the banks, be it the Chinese banks or some of the banks here in Hong Kong, which clearly, again, is attractive.
Okay, Marcus.